Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It's Tuesday. It is the last day of April. We've officially made it through yet another month, and the markets is still bullish. So another big day of earnings, but for the most part, the market continues to show resiliency, for the most part at least. Google coming in with earnings, of course, not so hot. It certainly had a rough reaction to that. Beyond Google, for the most part, we were in the green here today. And hey, William, hi, Micah, hi, Patricia. Great to see you guys, and I hope you had a great day both in and out of the market. Market was a little defensive today. Some of our best performing areas were in utilities and real estate, and probably the most exciting one, at least from my perspective, a nice little breakout on the consumer staples. So a little bit on the defensive side maybe, but certainly nothing to be too scared about, I don't think. And hey, Lloyd, good morning, sir. Great to see you and hope you're doing well. So you can kind of tell just looking at the heat map, for the most part, we were in the green, a little bit more of the same. Of course, Google, yeah, their earnings did not impress. Speaking of earnings, we have Apple reporting here tonight. I checked in just a couple minutes ago and was not able to find out what the numbers were. So we'll have to be sitting on pins and needles until a little bit later to see what Apple's earnings are. Obviously, they're the big name coming out here, but they are not the only large name. There might be the only huge name coming out here tonight or tomorrow before the open, but we've got over 40 S&P 500 stocks reporting either tonight or tomorrow before the opening bell. Beyond Apple, we've got Mondelez, Amgen, AMD, one of our favorites around here, all reporting here tonight. And then tomorrow morning before the open, some of those healthcare stocks, CVS, Humana, just to name a couple of them. So ADP, lots. YUMC had a good report here today. Let's see if the original Yum can do that here tomorrow. So very busy on the earnings front still. As you guys all know, we are still right in the thick of it. And good afternoon, Em. Great to see you and hope you're doing well. Taking a look at the S&P 500, we kind of, had that. Well, let's go to Google first. Let's just kind of get this, set the stage a little bit. Now, there were lots of earnings. And again, whenever you have lots of earnings, it's going to be a mixed bag, right? We had stocks gapping up, stocks gapping down. But when the big name of the day is gapping down, as Google did, and they fought hard, hanging out right at that 50-day moving average, but a pretty good size gap to the downside, really took the S&P 500 and the market as a whole kind of down with it on the open. It looked like, maybe it's going to be one of those reasons to take some profits. But as we've seen so many times, the market continues to show great resiliency, a little bit of a drift to the downside, and then folks are saying, yeah, good enough, a pullback's a pullback, it doesn't have to be much anymore, and they jumped right back in. We actually spent the second part of the day showing, in my opinion, at least quite a bit of strength as we continue to do this dance at this resistance zone. So we're still fighting. We're pinching in ever closer and closer. And hey, there's our friend, the 9 EMA again today, acting as a little bit of intraday support catalyst for us. We continue to battle that resistance as we continue to roll through this earnings season. Gotta love the defense that it's been playing. If there's ever been a great time to take profits, in my head, it'll be at resistance in the broad market. And we're still seeing buyers willing to come in off of really any sort of selling. At least that has been the MO as of late. So we continue to battle resistance on the S&P 500 as earnings season carries on. Over in the Dow, a little bit of the same. Ultimately ended up having a pretty good sized candle, from top to bottom, working down all the way almost to that 20-day moving average before springing up off of it. Second half rally that we saw throughout the day and closing actually, pretty nicely. So a little bit of bullish activity in the development of our candlesticks here today as well. Of course, as you guys know, we still are dealing with some overhead a little bit ahead of us here on the Dow Jones. we continue to fight, right? I mean, earnings and the battle of resistance have really been the story the last week or so in the market. Hey, I mean, good to see you. I hope you are doing well, my friend. NASDAQ certainly was hit the hardest on the Google news here this morning, gapping down along with Google beyond that, NASDAQ and of course the communication services ETF. But again, while Google, yeah, I mean, they held their own off of that gap down. And so you have to say, okay, good for you, I guess, Google. But really, the NASDAQ as a whole really continued to show great resiliency. I mean, it wasn't necessarily pretty, but we got to close above that 9 EMA yet again. So we're going on, all the month of April, basically above that 9 exponential moving average. We officially closed above it, I believe, every single day here in April. So continues to show good strength. As you guys know, we're starting to get into some of these techie type of earnings. So we'll definitely need to be keeping our eyes on those. But I mean, just great strength in the market. And I think that's really, I mean, kind of a broken record at this point in time, but that's what we got to work with. So can't complain too terribly much about it. After running into 16 yesterday on the run, it wasn't ready yesterday, wasn't ready here today, still kind of hovering just below that breakout point. This is a really interesting price area, in my opinion, for the rut. As you guys know, for me, it's 1605. I know for most people it's 16, but for me it's 1605 for the breakout. I will interpret that as a pretty strong bullish signal if we can do that. But another day passes with resistance winning yet again. That's a tough one to break, and that's why I think it's going to be a good bullish signal if and when we do actually break through that resistance area. But we are still fighting there here today. Nobody wants to be first, right? So we all want it to break. If we're directionally bulls, if we're theta traders, we're fine with it staying here forever, right? But nobody wants to be first, no matter what side of the equation you might find yourself on. So a little bit more of the same from a broad market perspective. I mean, it's really been like the old Bill Murray movie, Groundhog Day. I'm sure those of you who are old enough remember that one. I know Coach Matt and I watched that more times than I care to admit. It was one of our favorites when we were much younger traders. Well, guys, I don't even think we were traders at that point. So over on materials, had a really nice day. Much like the market, this one developed pretty interestingly. And hey, Scott, good to see you, buddy. This one really had an interesting development. We looked at this kind of intraday top yesterday that it was starting to develop on this pullback off of the daily chart. Much like the overall market, right out of the gates on the open, we drifted down here early. But once we kind of got that little bit of footing on the broad market, took a run at that resistance level, you can see a nice little push through that and a really strong follow through throughout much of the rest of the trading day. A little bit of profit taking towards the end of the day. But I thought that was really a nice developing candle. We ran right into that 20 SMA. The downside of being below those short-term moving averages is they can act at least as short-term resistance catalyst. And that's where we kind of ended the party here today. If we can continue this momentum, push through this, this little intraday high and the 20-day moving average, I expect us to be able to say, yeah, this was the pullback. We've established some support, and we should be working towards resistance here again. I expect that, barring again a huge disaster in the sector or the broad market from an earnings point of view, I expect that beyond this 20 SMA, working back into that resistance to test that once again is what I will at least be looking for. So it makes sense where we kind of stopped today. Certainly think we can continue to use the 50 / this old resistance zone. I think this is a really strong level of support for our sector right now. So I'll continue to do that. On the other side of things, our energy sector just does not want to cooperate. We actually gapped up on the open here on the energy sector, unlike some of the other areas, kind of gapped down and rallied throughout the day. We gapped up, and then immediately folks just started selling into this sector as folks are it seems like they're losing faith. I know I'm losing faith. I certainly don't feel like there's enough to turn to be a bear right now. I don't think you can, I don't think until we break this support down at 65, I don't think the information suggests that being bearish is the right play personally, but I'm losing faith daily, by the day, in the energy sector. Quite honestly, we're still hanging around right below that intraday resistance. Maybe if we can push through that, maybe we can get some buyers interested again. But at this point in time, I'm still treating it neutral with a slight side of bullish. I really do believe, and we talked about this a few times now, that the break is kind of turning into the trade in energy as opposed to the support bounce. It's not been very well behaved. It still hasn't done anything terrifically wrong, in my opinion, but it certainly has not inspired us with, at least it hasn't inspired me. So still looking at it pretty, and hey, Marie, good to see you. Still looking at it neutral with some bullish. And I think you have to be at least a moderately bullish or lean bullish or not bearish, or however you want to word that for me, above this support zone. But I'm starting to lose faith. I'd be lying if I said otherwise, which means tomorrow it'll be the day, right? Tomorrow it will be the day where it starts running up, just as I'm about ready to say, nah, breakout or bust. So we really held our own in the financial sector here today. Not much of a change, but after, Friday and Monday's really, that was some pretty big movement that we saw Friday and continued on Monday. And playing a little bit of defense, just putting together, we dipped down, but much like the rest of the market, came off of those intraday lows pretty nicely, showing a lot of resiliency. Again, I think that's kind of the key takeaway here. There was profits to protect, in the short term, at least in the financial sector, and folks being willing to kind of stick it out. I think that shows that whether it's tomorrow, we may need a pullback, may need to consolidate. But to me, that's just another reason to believe that this is an area to be looking at from a bullish point of view as we're moving forward. Really, our next real level of resistance, I know Jimbo brought this up last night, really is probably around $29. There is stuff, and there will be stuff on our different charts, that can, act as potential resistance catalysts. But any real clear resistance zone, I think you're looking here, you could make maybe an argument at around 2850, but I'm going to call it between 2850 and 29 is kind of the resistance levels for me, at least, going forward. I continue to like this. Above this breakout point, this is a really good break in my mind, with a lot of momentum on Friday and Monday. So I continue to like this area quite a bit. I know I'm not alone. Over in industrials, just a little bit more of a drift to the upside here. Again, much like the rest of the market, dip early, rally, and come off of those intraday lows pretty nicely. I think the key takeaway here is we're continuing to hold this low, which I do think now we can kind of say that, yeah, this is where we should not go below. That might be a show of weakness if we take out that low. There's me trying to draw a line in real time. Never a good time, but has to be done sometimes. If we take out this intraday low, that might be, a little bit of a short-term bearish signal. Now, I still don't expect that to happen, to be quite honest, but I think that would give me a little bit of pause from a bullish perspective. I don't think I'd go bearish. We'd still have the 50. I don't think really that would be a great signal to the downside, but I do think it would be at least a little bit of a red flag from the bullish perspective. Overall, as long as we're above this 77 zone, I personally believe that we stay on the bullish side when it comes to the industrials personally. Over in tech, the benefit of not having Google in the tech sector anymore, after being moved into the communication services sector, is tech didn't get drugged down on that gap down on the open. And we just another good solid day here in tech. Nothing too terribly different than what we've seen. Again, much like some of the other areas, we basically ran the month of April above that 9 exponential moving average from beginning to end, and that's strong. That's a lot of momentum. That's a short-term moving average. It's not terribly difficult to work back towards it. So all-time highs still looking good. Earnings coming up in some of these key companies, so that will be something that we do need to keep an eye on. But I couldn't fault anybody for, anything bullish really in the technology sector as long as it fits your rules. I think, I wouldn't argue against it whatsoever. Probably the chart of the day when we look at the sectors is going to be our breakout on our staples. We've talked a lot about that 57 zone. We've looked at it a lot, and we powered through that here today. And whereas the rest of the market, had some ups and downs, ended up pretty positively for the most part, unless you're energy. We really started strong and we finished strong. The bulls were in firm control here of the staples pretty much all day long. That is a really good looking signal as far as I'm concerned. Doesn't have to specifically mean for tomorrow, but this is, a pretty good little break in my mind. As long as we're holding this 57, I will certainly be looking for bullish opportunities, post, that are post earnings, obviously, within this sector. Really not a lot of resistance. I mean, we could, start to question things, but really, if you look at this, let's see if I can zoom that out. Let's move this. I know you guys can't see that. Really, there's just not a lot of overhead. There's really no great technical reason why we can't work up to $59. Something new may develop between here and there, but as of right now, I mean, there's basically no real resistance until that $59 marker. We're making higher highs and higher lows. We're breaking resistance. I think you have to really love where this sector is right now. Certainly not the only defensive area, although, for me, staples is kind of somewhere in the middle of aggressive and defensive. Personally, certainly utilities is a little bit more on the defensive side. I'm not going to go out on a limb on that one. Really nice day. We're still in this trading range. Let's come into a weekly chart because this is probably the time frame that we're watching right now. At least it's the time frame I'm watching. We had our breakout. We talked a lot about that 57. It tested it. It did bounce off of it. It was fairly difficult if you weren't sitting right there when it happened to trade. I wasn't interested, although in hindsight, I wish I would have been. Really, we are sideways here. We're testing this breakout point. A break beyond this resistance level, I think, would have to be a bullish signal. I love this chart at this point, not for tomorrow and probably not, for the immediate future, but I love that there's a very clear buy above 59, sell below 57 pattern type developing, K-trade style, the break of the resistance going to be a bullish signal in my eyes, at least a break below that 57 support, which we were looking at even before this retracement and test. A break below that, pretty clear sell signal in my opinion. Now it's just wait and see mode, wait for one of those two to happen for me at least, but a very strong day. If this momentum carries, we might be talking that breakout tomorrow. Now, resistance has proven to be difficult to break, so I'm not going to bet on that happening, but a very strong day here in the utility sector, working ever so closer to that resistance level. We are still doing that dance, and we're in a really interesting place. And we've got some companies coming up with earnings, right? They may have something to say about what wins as early as tomorrow on XLV here, but we've worked back into that old resistance. Let's peek at that weekly very quick, and then we'll come back here. We are right there at that old resistance level, at those moving averages. There's a lot of resistance from a weekly perspective. Very rarely do you see all, the 9, the 20, and the 50 weekly moving average kind of in that moving average soup where they're all kind of scrunched together like that. So that's a lot of intraday resistance along with that, pivot point, that swing low. So price-wise, there's a lot there. When we look at the daily chart, we're contending with the falling 20 SMA as well. If we're able to push through that stuff, I don't know that I'm ready to be bullish personally, but I do know I'll get less bearish if we do break above all of that. Now, we are also kind of in the pinch between the 9 on the upside and the 20 on the downside on the daily chart. So not for tomorrow. I don't see any scenario where a great trade, at least across the board, is developing here tomorrow. But I think once we break either side of these short-term moving averages, I think that's going to be a little bit of a tell. A break to the upside, which I still lean against. I still would go bearish if I had to trade right now. If we break out of that resistance, I will definitely change my opinion quite a bit. We've already seen a short-term buy signal in breaking above the 9. We've seen that 9 go from being down into up, a little bit of a fishing hook look to it. So we've got a little bit of short-term momentum. I think from a selling point of view, from a retracement, if I'm looking at this as a bearish retracement, I want to get back below that 9 before I get too crazy. That can, and certainly as we know, that can act as a support catalyst for quite some time. So I think as a bear, below the 9 EMA is where I'm looking. I do believe that this is a heck of a fight. It's got lots of stuff, whether you're a daily moving average user, a weekly, don't use moving averages, just use price action. There's a lot, there's pretty much something for everybody here to act as resistance. And so if we can push through that, I think that's going to be a little bit of a show of strength, and we might need to take our, at least go into neutrality. That's how I will be viewing it. But I'm still looking at for bearish retracements until that happens. So I'm still very much open to bearish retracements, but I do expect to need at least another day or so before I'm getting them kind of across the board at least. And hey, Thiago, good to see you, buddy. Hope you are doing well, my friend. A little bit of a boring day over in the discretionary sector. Not really much to see here. We are seeing our 9 kind of flatten out a little bit. If we want to get too picky, all that suggests is we're kind of going a little bit sideways. Nothing that we can't tell just by looking at the last week or so of price action, right? Much like the broad market, unlike the S&P that's kind of fighting with resistance, we don't have that in the discretionary sector, but we're kind of behaving the same way. We're consolidating. Looks like we want to break to the upside. Speaking of a break to the upside, with the price action that we've seen over the last week or so, let's come into a weekly time frame. If we take out these highs, I think that's a pretty solid little bullish signal. So maybe we do get a little bit of a retracement, but if we don't, a break of these highs over this past week of trading, I'm going to look at it as a bullish signal for potential new entries. Personally, at all-time highs, playing some defense, mimicking the market to a large extent. This past week, just hanging out and not really moving one way or the other. I still really like this. Above 118, I will pretty much be saying the same thing. Although if we do pull back into 118, maybe we'll get some nice pullback opportunities. So I wouldn't be opposed to that developing if that's the way it wants to go. And great to hear that, Thiago. Doing well, doing well. It's very springy out in Utah today. It's not a lot of sun. Last couple of days we've been gloomy and rainy and windy, but that's all right with me. That's my kind of day. So I'm one of the weirdos that like that kind of weather. So over in real estate, nice bounce back day here too, working right up into that resistance level. This is an interesting place. If we break this, you could convince me that it's time to get back in as a bull if we take out that resistance level. It's not perfect, but we've now created a higher low here today. We haven't been able to create that higher high. And let's just shrink this down. There we go. Let's go to a 4-hour chart. I think it's easier to see here. Deep pullback, work up, pull back again, working into resistance. If we take this out, I would expect there should be some movement to the upside. It'll definitely make me feel less concerned about the sector, certainly more open to it, if nothing else. That's an important price point in my mind within the sector. So the way it's developed these last couple of days after the nice run, which I think was very difficult to trust as a trader, we talked about it last week. Utilities, I could see the technicals why you might want to do it. I didn't feel the same way about real estate, and so it doesn't matter what I felt. It kind of had a nice little rally here too, but it was a tougher area to want to try to trade. With the way we've developed here, a break to the upside, I think you could argue that is another entry for potential bulls if they're looking to get in to the real estate sector. Bigger picture, I mean, we all know the story here. We've got lots of this support level, again, much like the utilities, although maybe not quite as pretty. We do have that breakout point still very much intact. So if it takes a little time, that would be okay. Maybe it would be great if we continue to trade back and forth and here the rest of the week and then break to the upside on Monday. If we are asking, why not, right? Let's stay within this trading range. But a nice bounce back day, if we can take out that resistance, I know I will feel a lot more comfortable from a bullish perspective if and when we are able to take that out. And then lastly, over communication services, I mean, really the big story here, is the Google's earnings. As we know, this ETF is very prone to work with the earnings of Facebook and Google because they're such big components of it. So no huge surprise with a gap down on Google. We got a gap down here on the communication services sector. Doesn't really, I don't think it's anything to really worry about beyond Google. Maybe we still have some of these companies yet to report in the next week or so, so maybe there will be a reason to worry next week at this time. But right now, this gap, to me, it makes perfect sense. It was all Google. That's what contributed. If it was a good earnings report, would have gapped up to 52 probably. So hanging out at that 9 exponential moving average and playing a little bit of defense, much like Google here today, kind of played a little bit of defense. You'd have to, I'm not quite ready to say you could, want to buy this chart. But if we, can catch our footing, maybe slide back a little bit more or just do a little sideways action, maybe you could. Any upward movement, if we take out today's high tomorrow, aggressively speaking, I could understand the argument. I wouldn't make it, but I could understand it. Still think we look at this sector, especially during earnings season, but really all the time in my mind on kind of a case-by-case basis, personally. So that has not changed, and it still hasn't changed. I've been saying that since the day that was up and running, right? So one day I might, but not today. So there we are with our sectors here. Big takeaway, a little bit of defense today in the market and some of those more defensive sectors, but the more aggressive sectors other than energy still continuing to look very, very much like they're supposed to. And even energy didn't really change today. It's just the lack of faith in that sector, at least right now, has me a little bit concerned. I need to come out of that trading range before I start feeling better about it, I think, and I still will like it. I can forgive it very quick, but it's going to need to get out of that trading range in my mind before I do. So over on the VIX, not a whole lot to see here as we continue to just kind of hang around in the market. And that's one of the fun things about earnings season. The market isn't doing much, but you go look at the top gainers and losers. You're seeing big ups, big downs all over the place. Maybe difficult to trade because so many of them are gapping because of earnings, but there's certainly individual companies moving around. Over in the dollar, a little more of a little deeper pullback here today. I don't love that it wasn't able to put up much of a fight at that breakout point. I don't think that's a huge red flag. We still have these short-term upward moving averages as well as that 50. So I want to see how it behaves if it tests this 20 SMA. If we see a little bit of decline, maybe we see a little bit of a doji tomorrow or small red candle tomorrow, followed by a little hammer on Thursday. Upward movement beyond this breakout point could definitely be something that was interesting in my mind. Can't happen tomorrow. If it's just going to be a huge green day tomorrow, it's just going to have to be on its own without me. But certainly I'm very interested. This hasn't done enough. I don't love that it didn't hold the breakout point. Really would have loved to see a little doji right here. Then we might have been saying if we can, show a little upward movement tomorrow, maybe the dollar index, it could be, or UUP could be something if we're looking at building a little bit of a longer term position in the dollar. Not going to get that here today. That can change. I'm looking at this as a pullback opportunity. Right now, I think I want to see it get back above the breakout before anything's potentially an entry on a swing level, at least, not on an intraday level, but I don't really do a lot on the intraday level with the dollar. So I'm always kind of thinking about a swing perspective personally. So don't love the way it got there, but we are here nonetheless. We do have some short-term averages to act as support. Really interested to see what happens if and when it tests this rising 20 simple moving average. Over in gold and silver, just continues to be a back and forth. It makes me feel better. Nobody seems to know if gold and silver are coming or going. I know I've certainly not been any different, and it makes me feel a little bit better to see this constant back and forth. That nobody seems to know either. So it's not just me missing something completely right now within the metals market. Continues to be an area to directionally speaking, in my mind, stay away from, at least for the time being. If we were looking at this from a bearish retracement perspective, and I'm certainly not, I don't think it didn't do enough to sell me a nice clean break, but that's me. I'm certainly not the only voice out there. A little bit more downward movement could be something that could be an entry point. If we come into the hourly chart here, we can kind of maybe see this low that we set up, put in a lower high, put in a higher low. So we kind of have this little, all right, I'm going to try to draw two lines live and in person. I don't know that that's a good idea, but we'll try it anyway, where we're starting to put in a little bit of a triangle pattern. Now, we still have some time to develop. I think it's probably a little early to bank on this pattern just yet, but that is kind of the way that the price has been developing here. If I'm looking at this as a retracement, a bearish retracement to build a bearish position in gold, below this could be where I start to get interested. I just don't love the way it behaved on the break of 1280. I think there's easier things to do from a swing trading perspective. So I'm continued to be a little bit on the fence, still lean on the bearish side, still making lower highs. I'm very sure of that, right? And so just not quite so sure of this break. And again, when you look at this on a weekly, I think it's puts a little more questionable. But if this floor does give out, that would be a pretty good signal. It's just a little bit of a messy floor, so we'll have to see where this one takes us. Over in silver, very similar. We're kind of worked all the way back down into this. I do think a break below this support level is a much better signal to the downside. If I'm looking at the metals from a bearish point of view, a break below these lows, I will have created lower high, yet another lower high, a little bit of a breakdown. I think that's a much better signal if I'm looking to play bearish in the metals market versus gold. Silver's chart looks a lot better, assuming we, of course, break that support level. I think we can now start to be thinking that this is the first level of resistance. So if I'm thinking about it as a buyer, which I'm not at this point, but that can change. There's no doubt about that. With the price action that we've seen, we could start to be talking about a little bit of a bullish signal if we can break back above these highs from Monday and Friday. So aggressive, yeah, probably too aggressive for me, but I would call that a bullish signal if we can close that. We'll have other things to deal with, 15.25 notably beyond that. But right now, pretty clear idea where our support level is here. If this breaks to the downside, I would definitely call that a bearish signal. Break to the upside, I would call it a bullish signal. I think the breakdown would be a better signal personally, but that can change. And depending on how long we stay in this range, very well may change, right? So, but we got a little bit of a range developing here. In silver, I think it's a little easier thing on both sides. If I'm looking as a buyer, I feel a lot better of building an entry above those highs on silver than on gold. If I'm looking as a seller, I feel a lot better about building an entry below that support level on silver than gold. I think it's a much cleaner looking chart. Over in natural gas, really interesting development. If you were looking at this as a retracement, right? You guys know how I feel about this 250 zone. I don't feel like it's been a confirmed break, so I am not looking at this as a retracement. But that doesn't mean I'm right, and that doesn't mean you aren't. So you may be, but we finally worked into that, that 20. We are kind of between these two averages. So I do, much like yesterday, a break below the 9 is probably the signal, the first signal at least I'm going to be looking for the bearish retracement. I want to like it. I do, but I can't. It did not break 250 in my mind. It stuck its nose below it on the intraday, and you guys know I'm pretty conservative about defining a break one way or the other. I just can't get behind it. So if we're looking at the pullback, a little more downward movement, that might be some of the signals that those traders are looking for. If I'm looking for the break, it's still below the lows that we set up last week. That would be what confirms the break in my mind, at least. If we push back above this 20, we are seeing this 9 start to slowly creep up. And whenever I see that, I want to see it get back below it if I'm looking to sell. We'll have to call it a little bit of a short-term bullish signal in my mind if we can close above this 20 SMA with a rising 9. That might give us reason to believe we're going to work back up into this resistance zone at the 50-day moving average and test it from there. So if you're not looking at this retracement, you're probably like me and just do whatever you want to do at natural gas. If you are looking at a retracement, you're probably starting to think, okay, well, what do I want to do if I get a little bit more downward movement as confirmation? And lastly, crude, the most interesting commodity of the day. We were able to carry over yesterday's momentum. This one is crazy. This is why you have to love technical analysis. Yesterday we had that nice bounce back day, and we ran right back into all those old highs. I mean, almost to the penny on the intraday. And then oh, wait, that was too quick. That was too fast, and we really sold off, putting together a pretty ugly candlestick here today for the most part. I mean, really good looking at one point in time, but at least for today, resistance really pushed us back to the downside. I do think this support zone is very important as we move forward, especially working up and testing that resistance here today. Let's try, again, a 4-hour chart. Yeah, there we go, just to make it a little easier. If this support zone gives out, I have to worry that it's a reverse head and shoulders pattern. We've got the left shoulder over here. We've got the head right here. We haven't broke down, but if we do, it looks like I would have the right shoulder over here. So this support level has turned out to be pretty important in my opinion. Now, there's still things that can prop it up and on different time frames, but if we take out this support zone, I think we have to take a step back from a bullish point of view, if nothing else, over in crude. I don't think I'd be running to buy in off of the 200 in that scenario. On the other side of it, it becomes very difficult to try to trade within this range unless we're working on an intraday time frame. So from a buying point of view, I think at this point you're probably looking at the break of 64.75 to $65, the same resistance zone that we had our most recent breakout on. Could have been a little bit different. This was certainly an ugly candle. I mean, we got to resistance and it completely changed its life goals, at least today. So we know where support is. We know where resistance is. I think right now we either are in, we're letting support work for us. We're looking to get in. We're waiting for a signal, or we're looking to get out. Well, support breaks, maybe it's time to go. But I do think the day's upward movement really confirms how important this support zone is. We know it's been here in the past. We know this zone is where we stopped last week. Now we've seen that upward movement. I don't expect it necessarily to be more likely to break to the downside or anything, but if that does, I think that's a pretty clear, at least one bearish flag has to be thrown if that happens. So we'll see if we can hold up. Sooner or later, we will break one way or the other out of this range. Maybe tomorrow. Maybe we're having the same conversation in a week. We will have to see. So, ladies and gentlemen, that's where we find ourselves after just another kind of day in the market. Nothing too crazy for the most part. Things are moving, but the market as a whole is just kind of continuing to process all of these different earnings. And until it gets a nice clean break or some clean pullback signals, probably should expect more of the same. I mean, that's really what it comes down to. No real pullback signals have been generated, but no one wants to buy it at resistance, right? Things are certainly still moving and shaking on an individual level. There is no doubt about that. Loving the breakout over in the consumer staples, love the breakout still over in the financials. So there's good opportunities, and we're just another week or so, and most of these earnings will be behind us. And for those directional trades, that makes life a lot easier, both in finding some, because if they have earnings, have to pass. If you're like me and have the rule that you can't hold it through earnings, even if they don't, you have to worry about, well, do their peers have a report that has a negative impact on them, like some of the energy stocks last week. So I won't miss it from a directional point of view. I'm not a huge earnings player. I don't do a lot of earnings plays. I actually prefer volatility builds than to selling the volatility personally from an earnings point of view. So I won't miss it, but it's been fun, and we've definitely seen some things moving around. So thank you very much, everybody. As always, thank you, Thiago, Patricia, Micah, Marie. It's always great to sit in with you guys, and always appreciate you hanging out with me while I do the old routine, getting ready for the next steps. So if you are new around here, of course, you guys know the drill. Be sure to subscribe to the channel and hit that notification bell, and join us over at Tackle Trading on Twitter. You can come hang out with me at Frank Martin 23 on Twitter as well. We've got the coaches show going on this afternoon for all of our pro members. So enjoy that, you guys. And of course, if you're not a pro member, head on over to Tackle Trading and let's get you hooked up with a free 15-day trial. You can see what it's all about. You know the drill by now. So hopefully we'll see you over there. Just keep an eye on those earnings. we'll see where we at. Of course, we've got some Fed stuff going on tomorrow, so that might be enough to prompt one way or the other. We'll see. We'll see. That's really not been a huge thing as of late, but it certainly could be. So we'll have to see if that does have an impact one way or the other. So thank you guys so much. You guys get out of here. Enjoy your Tuesday afternoon. I will, of course, see you all same time and channel here tomorrow afternoon. Thanks, everybody. Have a great Tuesday night. Bye.